What's up? Good morning, good afternoon, good night. Welcome to the BitLab Academy daily stream every day during the weekdays, Monday through Friday, 10 a.m. Eastern Daylight Time, EDT. I realized that I made an error when talking with somebody overseas, giving them EST because we're silly Americans. We have all these funny rules with time and measurements, right? We're just bizarre here in the US. But we've got a lot to talk about today. Markets are pumping. We're seeing some good stuff. We're seeing Avalanche is trying to break through. Gala broke out of its falling wedge. XRP setting up for breakout. Filecoin kind of broke out, but it's kind of riding on the previous resistance, sitting on support. We've got Cardano looking like it's in the middle of a breakout. Is it going to continue? Bitcoin, Big Daddy, head honcho, looking like it's trying to make a move. Will this sustain? GRT also right at the precipice of breaking out of its bull flag / falling wedge. Algorand also making moves. Markets are just looking exciting today. We got the total crypto market cap of all the altcoins riding right up against that key resistance. What the heck do we do? How do we trade this? It is March 31st, the last day of the month, 2023. And I want to let you know, anybody that's tuning into the stream, whether it's today or 6 months from now, you are going to gain so much alpha because this is not just about what's happening in the markets today. It's about the strategies, the tools, the things that can define your edge so that you can navigate these markets profitably and do it in a meaningful way that just doesn't steal your capital and destroy your emotional equilibrium because you're jumping in and out of trades. We've got a process for you, and we're going to be talking about all that. We're just going to go ahead first and say, welcome again to the show. My name is Kelly Kellam. That's where you can find me, at Kelly Kellam. Make sure you're following the correct person because there's so many fake accounts out there. It's Kelly, Kellam. Make sure you check out all these socials down below for BitLab Academy. And make sure that you go and check out the website, BitLab Academy, because we've got some great stuff coming. Let me just give you a little peek. This is the current website. Make sure you're signing up for the for the newsletter here. Free alpha, as well as you're going to be the first to know when the new site goes live. The staging site's already up. We've got a lot of the core stuff started to get integrated. Trading fundamentals, candles, candle patterns, on-chain analysis, trading strategies, beginner stuff, basic, Bitcoin 101. I mean, blockchain, there's so much in there, as well as the indicators and a community within our Discord. So without any further ado, I just want to say thank you, everybody, for tuning in. Shout out to all of the mods, as well as everybody that was here early on. Taylor Brown, I think, was the first one in the chat. Learning how you doing. Justin Eubanks, Taylor Brown, Mike Vollmer, your owner. Hey, maybe. I don't know if I'm donating myself, but I can volunteer a little bit of my time. We also got Alexandra G, Alex Green, Scott Rod 17, Crypto 420, Matt Lane, with so many people in here, Crypton Caravan Company. A shout out to everybody. Tom Crown, how you doing? Now let's just go ahead and dive into this. We got a wonderful guest in the house, so I'm just going to bring him right on. We're going to talk about these markets, what to do. Again, regardless of if you're watching today or in 6 months, this is all about the strategies and how you can navigate. This is bridging that gap from beginner to pro. So without any further ado, how are you doing, Mr. Bill Noble? How are you feeling?
Hi, I'm feeling great. Nice to be here. Thanks for having me.
Thank you for coming back on. We missed you a few weeks ago. Everybody needs a little rest and relaxation. We had a little snafu on our scheduling there, but so honored to have you back. And for anybody that's wondering, everybody in the audience liked you so much, Bill. They all sent me personal handwritten letters in old calligraphy style that said, we need to have him back and we need to have him regularly. So that's Bill and my plan is we're going to make this a regular thing with him coming on the show, as well as we're going to have other guests on other time slots, but we're going to try and make Fridays a regular thing with Bill. And so without dancing around any longer, what the heck is going on with markets today? Should people just be all in? And is it going all the way to 100K from here? What should we be watching out for? What are you seeing? How are you feeling?
Okay, well, you're always feeling good when it's green. Sometimes in crisis environments like this, I like to tell people to buy despair and sell euphoria. Euphoria may be coming in the middle of April because the hybrid solar eclipse that's coming up is actually good for Bitcoin because it's negative for the rest of the financial system. All right, so let's do crisis 101. Everybody knows the banks are in trouble. Everybody knows the Fed's lost control. Everybody knows the dollar's going lower. Everybody knows Bitcoin is the answer. Okay, but the problem is everyone knows that. Everyone, including everybody who reads Michael Burry's Big Short Twitter threads about why equity should go down. So everybody thinks the same thing. Now, what do you get when that happens? Well, you'll get a failure like Silicon Valley Bank. And then that was just like Bear Stearns. They actually both happened in March. You go back to 2008. And then what you had an everything was all right trade. That lasted months, by the way. Lehman didn't happen until September. So how do you trade and everything is all right trade? Well, you figure out what everyone's short, which is stocks, right? And they just continue to go up. There may be sell in May and go away in equities, maybe. But everyone's too bearish in stocks, everyone's short, and then it goes up. And the moral of the story is, from a evergreen educational point of view, is you don't want to be stopping out where you should be buying or selling. And sometimes when the trades are obvious, it's incredibly difficult because you have to be patient, even though you don't want to be, because you know it's going to happen. But you don't want to get stopped out. And that's what would happen in 2008. People wanted to be short, stopped out. Then it would turn down. They'll say, I'll sell an uptick. And then there wasn't any. Okay, back to how to deal with the current environment. So everybody wants to be long Bitcoin. That means you probably get a God candle to 34, maybe, right? Off the eclipse all at once. ETH is catching up, right? There could be an altcoin rally in early April because everybody thinks altcoins are going lower. Everybody's looking to be shortmatic. And what happens in that case? Just like stocks, what happens? It goes up. All right. So when you're trading a crisis, patience is the hardest thing to have, and you have to have it because, I broke it down, right? It's, sell in May and go away, buy July and let it fly, right? Short away on Labor Day. Okay. Stack sats at Christmas, right? That means after the consternation finally happens in equities in September, that's when you want to really get aggressively adding to positions in Bitcoin, not investment advice. And you probably want to add to Bitcoin positions in July. But the big question is, where will you be adding those trades? Okay. What level? Is it 20? Is it 14? Okay. We can discuss that. But right now we're in everything is all right. And when everything is all right, things levitate in the opposite direction of everybody's portfolio. The legacy jargon for that is P&L destruction. So that's the executive summary of what's going on in the current environment and how it connects to the past and how you can learn from it.
So and I appreciate that so much. For anybody that doesn't know, Bill is not somebody that jumped into crypto and started his first trade about 2 years ago. Bill has not only been in crypto for longer than most people in crypto, he's also been in legacy traditional markets nearly as long as I've been alive. And so he's got such a wealth of understanding, and having been through different experiences, economic situations, we can go back as early as 1991 or the 2000 bubble, the tech bubble, or 2008 housing crisis. And so, my question right now is, and just so anybody knows, I want you to know we're going to be going through a lot of charts, but we've always got to, no matter what, before you jump in and make any trade, before you make any investment decision, the healthiest thing that you can do is sit on your hands and go into your mind, dive into your mind, ask yourself what, where, why. How does this relate to now? How does this relate to past historical situations that were similar? We need to get into our psychology, which is our engine, our operating system, so that then our output into the exchange, into our trading decisions is well thought out and well considered so that we can make smart decisions. So right now we're seeing markets pump. Whether you're looking at the Dow Jones starting to rise, S&P 500, NASDAQ, everything, a lot of it has been actually more sideways than anything. And we're seeing this very bizarre, I don't want to call it bizarre because everything in markets is agnostic. We assign, excitement, hope, fear, greed to it. So the markets have been performing in a way that has been frustratingly almost contrarian to what people are expecting because of the global sort of situation, economic situation, and the likely impending recession. How are you as an investor? What would you as an investor or trader that's been in markets for so long, how would you sort of approach your trading desk right now? Are you looking at it being aware of the global sort of economic context, but trading purely on technicals until those technicals change? Or what's your strategy right now for this sort of situation?
All right, Bill Williams was a famous quant technical analyst, and he used to teach his people that you gotta want what the market wants. You got to get psychologically and almost spiritually in sync with the market. Matter of fact, when he taught trading, brace yourself for this. When he would run his trading academy, he would have his students get up and write out 3 written pages of stream of consciousness, like whatever was in your head, you would dump it before you started looking at the market, versus people in crypto who are like, oh, well, here I woke up. Where is it? We all do that. Okay. So keeping your head.
Sometimes we do it 42 times in an hour, especially early on when you start investing, and you realize the less you do that and the more you just actually have a plan and, stick with your plan, it's a whole different ballpark.
Right. And William Gann used to say 2 things. One, don't look at the tape every day. The tape is what they used to call the stock market because they actually used to look at it on paper, right? Yeah. Don't look at the tape every day. Like, leave it alone. And don't try to catch the last 1/8 of a move. So in Bitcoin, if it goes to 30 and you're like, oh my God, I missed it. Chill. Okay. So how am I approaching the markets? Want what the market wants. Okay. The market wants Bitcoin. The government knows that. In this environment, you have to be aware of your macro, your geopolitics, and you also have to be aware that whatever they're talking about on network TV news and crypto Twitter is wrong. So if you don't know what's right, just look at what they're doing and it's wrong. For example, everybody's wound up about, a natural gas trade that the Chinese did with the French bypassing the dollar. And the dollar is not going to be the world's reserve currency anymore. Okay, whether it is or it isn't, that's a gigantic geopolitical event that the whole world kind of has to sort of agree on in a way, or vote on. What people should be asking themselves is what happens if the dollar drops 50%, DXY drops 50%, like it did in 1985? Does that produce hyperinflation? Because that's the other thing they're talking about on crypto Twitter, right? Catastrophizing. No, it doesn't, right? The Fed actually wants the dollar lower. That actually helps U.S. risk assets historically, because it encourages other people to get into other appreciating currencies and invest abroad. Now, that's probably not the case this time either, but people are not focused enough.
Let me ask you, let me pause you there for a second, because I posited this sort of theory or question, and I don't know what the answer is. It's more of a speculation or a curiosity. Now that, the DXY, the dollar index, of course, is the value of the dollar weighed against a basket of other currencies, as well as sometimes attributed to risk on, risk off narrative in different ways, depending on what's going on in the market. But as we're seeing this shift right now, which some people are in their minds, I think, fearful this is going to happen over the course of a week. This is probably going to happen over the course of 15 or more years, probably more than that, out of the US dollar being the world reserve currency, if that were to happen. But as this sort of narrative changes and the interest in the US dollar globally, or the use case as the backing of trade, as that shifts to other currencies, whether it's stuff within the BRIC, I almost said organization, the BRIC alliances, do you think that that's going to change the way in which the performance of the DXY is correlated or associated with positive or negative performance in assets?
Okay, yes, I do think the correlation could change, right? I mean, last year it was, dollar up, commodities up. Normally, when you have dollar up, you have commodities down. Of course, there was a war involved. Okay, so with the DXY, rather than focus too much on this reserve currency thing, you should be asking yourself, because remember, we're talking about a trading plan. How do I make money if the dollar trends lower and then maybe accelerates later? Later meaning like next year. How do I make money off a dollar downtrend? Because the foreign exchange market can sometimes be simple, right? Things going good in a country, currency up. Things going bad in the country, currency down, right? And you know, legacy foreign exchange, man, that is the crypto of the legacy market in terms of volatility. So how do you make money? Well, it's like, you know, I've been like, hold your gold until you're old. That's been my joke. Gold, silver. Silver's been moving as of this recording. Right now, the dollar in Bitcoin is tricky. So the current administration, the executive branch, and probably the congressional branch would see it as egg on their face if the dollar fell apart. And even if the dollar does fall apart, it's even more embarrassing if Bitcoin's trading at 250K, because 40 million Fidelity customers and every American just goes, I need Bitcoin, and hits the green button. Doesn't really matter in the scope of things because crypto's too small of a market, but it's embarrassing. So when they come up with this TikTok bill, which is effectively their invasion of the internet, we can talk about that. That's been everywhere. That could be an attempt to really hurt crypto because they don't have to declare everything as a security. They just have to say, oh, you guys operating this node on this internet network, yeah, you guys are cut off. So dollar up could mean Bitcoin down and then Bitcoin up. Like I said to somebody the other day, wouldn't it be funny, because in research, you get paid for imagination. Wouldn't it be funny if Bitcoin made a new low for the move and then it turned around by the end of the year and took out 65K? We've gotten used to, you know, Bitcoin as a not volatile instrument. I would encourage you to broaden your mind about that, because again, the question at hand is, how can I make money off a lower dollar?
Yeah, I mean, at the end of the day, I think sometimes we forget that we're so excited. Some people get so blinded by the promise that is blockchain, Bitcoin, crypto. And part of that, I think, is having seen, whether it be a friend or somebody that they've identified or come across online, or stories they've read of some people having made millions in crypto. Not really, not that it's not possible still. I think it's absolutely probably more possible than ever now, but there's a whole different structure and strategy in place now than if somebody got in 2011. The structure and strategy in 2011 is they were so far ahead of the curve. If they had the balls to hold, if they had the courage to hold, they made a lot of money. Whereas now there's the play is a little bit slower. You've got to also still have the courage to hold, but also have the knowledge about if you are going to buy at a top, your courage to hold must be exponentially stronger. But as we're looking at it right now, markets, you know, we could talk about we had $4 billion in options expiry today. We also had the end of the quarter wrapping up today, as well as the end of the month. We're seeing a very, very strong performance on the charts right now. Everybody, you know, every trader in some way or another, whether or not we want to admit it, we always try to attribute the reason why the price is doing what it's doing. So in that notion, is the push up today because of the options expiry? Is it because there's just a natural fleeing from the banks, and it's very, very small percentage, to crypto? Is it because the narrative and the awareness of Bitcoin is strong enough now to sort of capture some of that? Is it all the above? Is it just because of the technicals? What, like, if you're pulling up a Bitcoin chart and trying to sort of formulate some sort of understanding of also the larger, the more macro picture, how are you negotiating between the two, and how are you looking at the chart right now to see not only the technical levels, but the likelihood of those levels being fueled by hope, fear, greed, or actual just the technical drivers of this is the way the momentum in the market is going?
Okay, so yeah, there's a lot to unpack there. So let's start with options expiration. When I worked in legacy, options expiration was practically PTO. Yeah. So chart guy, what happens on options expiration has nothing to do with technicals as in the charts. It really has a lot to do with where the open interest was at what strike, right? And whether or not options positions that would roll off would be put back on again. So it was really a game for the derivatives desks at Legacy rather than the chart guy. Now, that said, thanks to ChatGPT, there were a lot of 40K puts, meaning bets that Bitcoin would stay below 40K, that were probably put on a long time ago, that would pay you if Bitcoin dropped. They rolled off. So those people who were hedged were not hedged. And then there was a lot of 2000 puts in ETH. Again, people looking to be hedged in case of another drop. So yesterday, the market was down. So on March 30th, the day before the expiration, there was pressure in the market because people probably bought new puts or they made new bets on the downside, which, put pressure on price. So most likely those positions were reloaded because, a hedge doesn't mean someone's bearish. A hedge may mean, like Michael Saylor, they may have truckloads of Bitcoin and they want to have these options as like an insurance policy as protection in case it falls out of bed, in case the government takes over the internet. All right. So the relief rally that we're watching now, the pump, is probably absence of selling, one, and two, quarter end window dressing. Another legacy term. What's window dressing? Well, if you're a portfolio manager and Bitcoin's up 68% for the quarter, and your quarterly report shows you don't own it, even if you didn't own it. If you don't own the thing that was up 70%, you're a moron. So, we got to get it on our books. Now, how you see in the market? All right. I'm share screen here. So I believe in crypto, you got to use horizontal and diagonal support resistance, right? So this is the obvious horizontal resistance that a lot of people are looking at, this congestion zone around 28 to 30. That's fine, right? Sometimes if too many people are looking at it, it's wrong, but let's just go with the fact that this zone is something you should be paying attention to. And then there's things that people can't see. There's the horizontal, and then there's the diagonal. Now, most people in diagonals want to draw trend lines. My experience is trend lines and traditional patterns from legacy, like triangles, they don't really work in crypto. So I picked up this thing called Fibonacci Speed Resistance Fan. Okay, it like right here at TradingView, it uses like diagonal lines, and it draws them using fib math. So it takes the subjectivity out of it in a way. You got to pick a high. So we'll go with March of last year, and we'll connect the FTX low, and look what we get when we zoom in. We zoom in on this, and looky, right? It kind of broke out the other day around 27. It came back, retested it when they reloaded their hedges, and now it's popping back up again. And this next diagonal line is all the way up at 34. So how do you read that? Well, maybe after everybody gets done selling for tax purposes, there's like a God candle and people panic. Everybody goes, oh my God, I missed it. Now, what happens when everybody goes, oh my God, I missed it? Well, they buy the top. So I'm not saying it's not going up. It probably is. And it probably can go a lot higher than anyone thinks. 34. Like I found that just before we came on. So horizontal and diagonal are important. Now, when it goes to 34, what should you do? And I was talking sell in May and go away. Even though that's really hard to do because we love Bitcoin. We know the banks, long Bitcoin, short the banks. We get it. But what happens if this is right? So this is Tom DeMark's work. He's a quant technical analyst, and this is pretty simple. He has his own way of calculating Elliot weight. So he kind of takes a little bit of the subjectivity out of it. So this is Bitcoin weekly, right? This is the top 5 and 0. That was 5 wave up and end of the up move. Big moves have 5 waves.
I'm going to pause you there for just one moment
Sure.
because this is such gold. This is such gold. And I want you could pull the chart back up, but
Okay.
Just for anybody that may be new, or maybe even somebody that thinks they're a pro, because all of us need to remember, we need to remind ourselves of our humility and re-engaging with things that we think we know and learning it in new ways. Can you give just a basic outline or a basic description of what Elliott wave theory is and how and why it sort of relates with markets? Like how are you don't need to give a 10-minute breakdown, but just the general sort of idea and concept behind Elliott wave theory.
Okay. Elliott wave, like Fibonacci and Gann work, really takes the numbers in nature into account. Like Elliott was a guy who sat on a beach and watched waves come in and then developed this theory. All these mathematical geniuses like Gann, Elliott, Fibonacci, they understood the numbers in nature. Like, for example, a human female, most of the time, the distance between her belly button and the ground is 62% of her height. I learned that at the New York Institute of Finance. Okay, so what's Elliott wave? Well, there's normally a short squeeze or a profit-taking wave for wave up. There's a quiet wave 2 where no one believes wave 1. And then wave 3 is very impulsive, meaning it kind of just goes up and up and up as people slowly melt away their disbelief. Then it kind of has a big climax at the end, at which point it then comes off for wave 4. Wave 4 is usually a big triangle-like pattern. To get
and so just for clarity for everybody, this works up or down. So it's essentially this idea of having a push, a pullback, a push, a pullback, a push. So we're having the basically 1, a 2, a 3, a 4, a 5. Is that correct?
Yes, that's correct.
And then same thing for the downside. Yeah.
Right. So here, the DeMark work, it gives you, off the top at 68, that's 1 down, 2 up, right? 3 was the FTX low. Now, okay, wave counts can be wrong. Okay, this thing is saying that this rally is a 4. And the 5 wave is normally very emotional and normally goes below the bottom of the 3 wave. So I'm not running around advertising this, so it's kind of like almost like a BitLab exclusive. But, if this thing tops at 34K, if everybody rushes in and buys the top, and then the government takes over the internet, or you have an electromagnetic solar storm that messes up electrical power, because that can happen too. I mean, Google solar storms 2023. If this turns out to be a top and there actually is a new low, this is why I said at the beginning of the show, you do not want to be selling and panicking when you should be adding. You don't. So you want to trade it from 27 to 34? Please, absolutely. Do you want to marry Bitcoin at 34? I would say no. Can you enjoy an altcoin rally over the next month and a half, maybe? Yeah, because there's got to be a catch-up move. But what happens, and again, in research, you get paid for imagination, right? You have to look at the chart and you have to ask yourself, what is the market telling you? Want what the market wants. What is the message? The message could be that before Bitcoin takes out 65K, it could make a new low first. So it could print 14 in June or September, and then wind up at 80 by January 1, because everybody watches the stock market crash in October and realizes it's time for the decoupling. So you're probably saying, well, either that's BS, or maybe you're saying I could never do that. And that's not true, right? You can draw a support and resistance line. You can develop your method. My method is not your method, right? I like to use DeMark. I've been using DeMark. DeMark's been around since the 80s. I've been using it for 12 years, more actually. Okay. These fib resistance lines, I picked it up in a Discord and ran with it. So just because I have something doesn't mean you can't figure out something. Because at the end of the day, you can read other people's research. I read other people's research, but you rise and fall with what the smartest person I know in markets calls a research framework, right? You rise and fall with your research framework. Now, sometimes once every couple of years, you have to alter your framework a little bit, but you don't alter your framework day to day or week to week. You don't. So you can build it. And then once you build it and it starts working, stay with it. Don't marry it, but stick to what you know and learn, because you can know and you can learn, which of course is a fitting message for the BitLab channel.
Yeah, I wanted to also just shout out everybody in chat. Thank you everybody for being here. Also, we're going to be going for quite a bit longer, but I wanted to say we got 240 people in here, only 75 likes. Let YouTube know that you like crypto content. It helps spread the word of crypto, helps push crypto in the algorithm so other people get exposed to this as well. So hit that like button, hit that subscribe button, and ding that bell, because it really does help not only this channel, but crypto as a whole. And I also wanted to shout out, if you haven't yet, make sure you come over to the BitLab Academy Twitter, which is right here at Academy BitLab. Retweet today's tweet, because we're going to be doing a drawing at the end of the day. We're picking between Monday, Tuesday, Wednesday, Thursday, Friday. We have a spinny wheel. And then whichever one of those days gets hit, then we're going to be basically drawing. We're going to be pulling from all those of you that retweeted these daily posts. And we have another spinny wheel for, it could be multi-month membership for indicators, could be multi-month membership for the courses. There's a bunch of different stuff on there. So go ahead, get involved, help spread the word of crypto, and make sure you are following Mr. Bill Noble, and that's his Twitter handle right below his beautiful face there. I want to continue on here. There's so much. I mean, we could unpack this over the next 6 weeks and still be nowhere near scratching the surface. And it's always a challenge doing these streams. And you've got a wonderful stream that you do yourself. I've been following you for years. As somebody that may, whether they're a beginner, intermediate level, pro, whatever it is, I find that the people that are at the pro level seek knowledge the most. They, even if they think they know something, they're always learning, always trying to find a new edge, because the second an edge gets widely publicized and everybody knows about it, that edge dynamically will have to change because it is no longer an edge. So as somebody that's investing and trading in this space, other than having a strategy and a plan, what are some free basic tools that somebody, when you're looking at a chart and you're trying to contend the chart with the news, or whatever the strategy is, what are some free basic strategy, basic tools people can utilize to help not only do their TA to identify levels, but also identify momentum shifts, or help make sure that they're making good calls that have confluence, that have agreeing factors that help point them towards a more probable or higher probable trades, which is ultimately the goal in any investor or trading strategy.
Okay, interesting question about what's free. Okay, let's start with what's free. CNBC can be free if you have TV. So whatever they're talking about on CNBC is wrong. So if you don't understand macro, just understand that whatever they say is wrong. Start with that. Then a pencil. University of Texas Executive MBA program, statistics class. Professor walks in. He says, the first rule of statistics is plot your data. I could have walked out after that. Everything else was, difficult, but that's the number one rule. And you know what? If you need to learn Bitcoin, you're like, you're watching this, you're like, oh my God, how am I going to learn this? I had the same moment in 2017. Ex-Goldman guy calls me up and says, hey, Bill, why don't you take a look at Bitcoin? I'm like, what's that? Pencil. Plot it by hand. Get some graph paper. I draw Gantt charts. I draw a bar. But you can just draw a line, or get a notebook and write down the close and look at it. Experience it. Right? Some people keep trading diaries. You can tell people that, but in a digital era, do people do it? I don't know. But you can write down the close every day, or you can get a piece of graph paper and plot it. So you can start learning how and why it moves. You can compare your plot to CNBC. You can compare your plot to what's on Investopedia. It's like, hey, I wonder what this formation is. Oh, Investopedia says it's this. Oh, well, okay, let's go over to ChatGPT. Say, hey, ChatGPT, what is this? What does it do? Right? In other words, use these free tools to experience the market, if you knew, right? Understand for yourself how and why it moves. Now, I got some other stuff, some books. I don't know if you want to see the books that I used back in 1991 to educate myself. That's not free, but, it's not, a $10,000 a year research service either. So you can cue me on that.
Well, there's just so much that goes into this, and I want to emphasize a point here or bring it up, because I think one of the struggles, I'll speak from personal experience. One of the struggles I had when I really got involved with the investing and trading in the crypto market was I had some, I had experience from before trading traditional assets. And one, I forgot for a period of time when I made my largest errors in trading is when I had a string of very good trades, not relating my string of very good trades to also trading one spot, but two, in the 2016, 2017 all up market. And essentially, if you threw a dart at a chart and just bought, you could do 10 buys in a row. One of them would have lost money and the other 9 would. So a lot of people thought that they were great traders. And I fell into that sort of, that pit hole there. And, I actually got up to the first time in my life I had, a little under $100,000. And I thought, man, I'm going to be a millionaire tomorrow because I'm so good at trading. I'm going to leverage trade now because if I can just add the leverage, and I did this doing spot, and because I lost my humility and I didn't understand, the dynamic differences in markets and how it can sort of, based on your strategy, set you up for successful failure. There's so much that goes into it. So I just dove in head first after taking that loss. And of course, it wasn't immediately, I probably had to take a month of just resuscitating my emotions and my ego and my pride and everything. And so when I started diving into learning, I took that knock on the chin and told myself that was my crypto tuition. And it was the best lesson I ever learned. But then that was followed by something else that I think a lot of people go through too, is it could be a lot of people here in the chat right now, could be people on other channels, people of other spots in the crypto ecosystem. There's so much information available to us right now, not only in crypto. There's more information readily accessible to the average human than ever before in human history. And so now as crypto and these markets and this opportunity presents itself, as people learn more about it or become more aware of it, it becomes more and more attractive. And then we see how far other people have gone in the space, whether how much money they've made or what they've built. You could argue it in many different ways, but there's a huge sort of human component there of this comparison factor. And then there's this ego and pride. And sometimes there's a lot of ambition that drives people to continually want to learn and want to grow. And with that, this is all long-windedly leading up to this sort of idea about, we realize there's so many different avenues out there. There's so many different strategies, whether it's the Elliot wave theory, whether it's trading only reversal patterns on head and shoulders and inverse head and shoulders, whether it's trading just price levels, whether it's Fibonacci's, whether it's understanding, or there's just, the list goes on and on. And so as people dive in, there can be a huge ambition and excitement initially that can very quickly be followed by this fear of analysis paralysis or just needing to know so much. So how does one contend with, identifying what strategy works for them, but also prioritizing what things they should be learning and what things they should be focusing on, especially early on, so they don't feel overwhelmed by the burden of how many different options are out there? Like, what would you say to that? And what would be your thoughts on that?
Okay, well, I think the first thing you have to look at is candlestick formations. Like candlestick formations, back when I started, I learned from the original guy, Steve Nissen, who had the Japanese manuscripts translated into English and he wrote a book. Japanese used candlesticks to trade their rice markets back in 1766. So when you see candlesticks, that's like a standard thing on TradingView now. But you have to understand the relationship between the high, the low, the open, and the close. And candlesticks help you do that, right? Like what happened today in the market? Did the market drop and then it came back up, producing a wick, as you might hear on crypto Twitter? So the bears had control and then the bulls took control again. And what does that mean? Right? You have to develop an understanding of looking at who's got control, the bulls or the bears. It's this constant push-pull. And then I just call it look to the left, right? Where did the markets, everyone's like, oh, I got to learn support, resistance, pivots, false breakouts, setups. Okay. Look to the left. Okay. Where did the market start going up or down? And where did it stop going up and down? If you frame in your mind that as a way to understand support and resistance, okay, then you can start learning how to use it. What happens a lot of times in crypto is everybody will see the same horizontal line. Big institutions push the market through there, trigger all the retail stops, sell into them, and then the market drops. So if you have a resistance point, you go above it, and then it fails and comes below it, ruh-roh. But you have to learn how that works for yourself. And the only way you're going to learn that or figure that out is to look to the left. Where'd the market start? Where'd the market stop?
Yeah, with this sort of, I love that you're framing it this way because, even though within the BitLab, we have a whole indicator pack that we sell, and it's a phenomenal indicator pack. But one of the things I try to remind people of is the best indicator that's available on any chart ever is the chart itself, is the price action on the chart. The price action, the candlesticks, whether you're looking at monthly, if you're looking at a monthly candlestick formation, then you have the ability to then look at the 2 week, then the weekly, then the 3 day, then the daily, and every time you go into smaller time frames, you're basically getting better resolution as to what's happening. And essentially what people are seeing when you're looking at a chart and you're looking at price action is exactly that tug of war between the bulls and the bears. The candle, for instance, if we're looking at red and green candles on a chart, red being bearish, green being bullish, if a monthly candle is green, it doesn't mean there was no bearish trading. It means that the bulls dominated the momentum in that time period. And what I really want to encourage people to do, I think people get so excited about getting in this market and they get greedy very quickly because they want to catch up. And so they start trading on a 5-minute chart or a 2-minute chart, and they don't understand how close to a heart attack they're coming every day by just giving themselves unnecessary stress. And it's like, when we think about learning to walk, you don't get out of a bassinet and start running. Getting on a 1-minute chart is running before you learn to walk. If you can't master trading one cycle on a monthly or a 2-week, there's a very low probability you're going to dominate a 15-minute chart. So play, even if it's a swing cycle. I try to encourage people to play a swing cycle that's over the course of, let's say, 3 to 6 months or a year, and try to see if you can identify somewhere near a top to get out and somewhere near a bottom. You don't need the exact. And then when you master that, break it down to a smaller time frame if it's within your time allotment, your ability to have a focus to do that. So I love this. The price action is so overlooked, and understanding the momentum of the candles on the chart, and then adding whatever momentum indicators like MACD or RSI and all these things that derive their data from the candlestick patterns.
Yeah, I think you also have to look at it in terms of what I would call active portfolio management, right? Like even if you have no money, you might have an IRA, a 401k at work, some cash in the bank, a gold coin, whatever. Okay. When you think about crypto in the beginning, you want to say, all right, I think I want to be organically long. I think we've established playing with leverage and futures is for, serious advanced people. So, in crypto, in equities, you can just be long and watch it go up. That's the last 15 years. But in crypto, if you're going to be long, you have to be prepared to do 5 or 6 trades a year. And if it goes to 34 and everyone's like euphoric and wearing a lampshade on their head, or you're wearing a lampshade on your head because you're so happy, that might be a time to lighten up, manage your portfolio. Just, be like, okay, I'm going to have a little less here. So maybe if it drops, I can put in a little more, right? And you might do that 5 times a year. Think about being a portfolio manager. You're organically or naturally long, but when Celsius and sell in May and go away come around, you're like, all right, let's move to cash. So it's like, I got to use I got to use this and such and such indicator to like buy it, have it go up, right? And by the time I sell, the Ferrari's waiting outside and I can text my boss and quit my job. It doesn't work that way. It doesn't.
So, I mean, first off, everybody hit that like button, hit that subscribe button, ding that bell, because Mr. Noble here is dropping absolute bomb gems here. There's no better way to really frame some of the things he's sharing here. And we forget sometimes, we always want to see charts. What's action happening right now? Well, this goes back to what my comment earlier. It all comes back to our operating system. Whether it's me or Bill or CryptoFace or Frankie Candles, it doesn't matter. We can share a strategy that has worked for us 9 out of 10 trades and we're making millions. We could share it with 10 people and there might be 3 people that execute that strategy in the same way to make similar profits, while 7 fail at that strategy. And it comes back to not the strategy itself, but how we're negotiating our inner work, our emotions, our ability to not see a green candle and go, oh, I'm missing it, I better get in, only to have it reverse. Then, negative positive reinforcement of saying, yeah, every time I buy, the market drops. Well, that's the strategy. That's the emotion buying versus the strategy implementation. So with all that being said, I'd love to pull up some charts and talk a little bit about, of course, Bitcoin is pumping right now. It's, of course, let me look at it real quick. Yeah, it's still pushing up. It's at 28,597 at the moment. And we can see that other altcoins are starting to make moves as well. We can see on the total market cap, this again is right at that resistance level. But I wanted, with you pulling up some charts, I'd love to get your sort of thoughts on and sort of how you consider the capital and liquidity flow within the crypto markets. Whether, for instance, I've been talking the last week or two about watching the dominance, the Bitcoin dominance, and how it's been oscillating between this channel and why that's so important, understanding why, when, and how we can sort of set up for getting in position for altcoins. And then when to get out of, and we don't need to break all those specific things down, but when you're looking at the Bitcoin chart today, what's your characterization and your own sort of portfolio, not your exact portfolio allocation, I'm not going to ask you that, but when you're negotiating, as you said, active management of your portfolio, other than Bitcoin, are you long Bitcoin right now? Do you have a stop somewhere? Are you just riding it up to 34? Are there certain altcoins you're specifically looking at that are in position? Let's go through some charts and see how the Wizards is sort of navigating this market right now.
Okay. All right. So let's start with, consensus thinking, right? What does everybody want to do? They want to be long Bitcoin. Okay. Fair enough. Well, everybody probably spent the whole first quarter going from having no position or long altcoins to moving it all into Bitcoin, to where Bitcoin dominance gets the resistance. So, this is a Bitcoin 90-minute chart. So this 13 top, this 13 is a DeMark signal that, this trend might be running out of gas. And if it defies the 13 top, then it's going to 34. It's an important lesson. If something is bearish and doesn't work, it's bullish. Just to throw that out there. Now, if you go to Cardano, right, couple things. Some of this DeMark work, it requires an explanation. It's complicated. But one of the things that the DeMark work does is it draws these dotted lines of support and resistance automatically, which is nifty. And as you can see in Cardano, there's 2 sets of dotted lines, and it's tried to go up here 1, 2, 3 times. right? So everyone thinks it's going to stop here again, right? Maybe not. You know, these little green numbers, this says 4, this could go up to 9 based on the theory. So there's resistance here, but you have to ask yourself, what happens if it's not resistance anymore? Now, will it break or will it won't break? That's the next question. Logic. Okay, so this is Cardano monthly. Cardano goes down. This is a bottom-ish formation, but that's not what you need to worry about. See this green candle and that 1? That can say, hey, you know, the bottom may be in and this thing can rotate and go the other way. It's kind of like confirming that, you know, that's it. You know, and this is everywhere. Like I was looking at Polkadot and, well, actually, let's do Avalanche first. So this is mixing the news and the charts. So that's a 1. It's pretty simple. You know, the market went down this month and came back. And it looks like they're going to eke out a green candle. Now, why is that relevant? Well, Amazon's got to partner with these guys. Web 2's got to buy Web 3 because their revenue growth is completely stagnant year over year. And BlackRock and Citibank are talking about tokenizing assets. Corporate bonds, real estate, portfolios of mortgage-backed securities. It's endless. There's no liquidity in legacy. None. Venture capital portfolios. No liquidity. That's what happened to Silicon Valley Bank. They couldn't get liquid fast enough to make good on the run on the bank. There's no liquidity in the market. So they've talked about tokenizing. Well, Avalanche, as I understand it, has a special component of its blockchain that would allow for security tokens to be created. And security tokens have been around, Polymath, T0. This stuff's been around forever. And obviously, one great candidate for security tokens or the tokenization of everything, I used to look at Ravencoin. Not sure if that's good anymore, but what about Polkadot? Interoperability, right? Kind of nifty here. It's called a doji, right? Open here, all the way back down, and close at the same level. That's the bulls going, oh, wait a minute. You want to drop this? I'm going to bring it right back where it was. And now the bears can recompute. That little DeMark 1. Well, be kind of funny if you got a couple of months of up in altcoins. Who's expecting that? No one. Nobody. I mean, what if Bitcoin went down in May and June and altcoins did okay? That's theoretically possible. So I think when you look at a monthly chart, you know, I like some of this stuff because I like to look at stuff that nobody else can see. And that's part of the allure of DeMark and Gann. You know, mainly this stuff is frequently used in legacy. Now, Solana, right? Everyone hates Solana. Okay, well, don't hate it too much because could the Solana phone be next? Do you think Apple and all these Web 2 groups that are all interwoven with Washington, D.C. are going to offer you a crypto phone with a wallet that gets airdrops and all that stuff? Once upon a time, people carried a BlackBerry and an iPod. The BlackBerry was phone and email. The iPod was music. Sounds really square. People were doing it. Before that, it was a Palm Pilot. Got to Google that probably out there. The stuff that no one can see, the stuff that no one's thinking about. You know, the Solana phone, if you have the dawn of crypto as an alternative asset, there may be an alternative device. There may be an ETH-based operating system. Maybe the ETH-based operating system uses like something called ZK rollups, if I'm getting it right, where you can wave it over a barcode and you can confirm that you're over the age of 18 without telling somebody what your date of birth is. You could just confirm that you're 18 using the phone. Privacy. That would be refreshing. That's going to be out there. And when you look at this, when you look at that Solana, when those bulls are making that counterattack, why are they making the counterattack? Okay. So, you know, sometimes it's simple on the charts.
It's, it's like riding a bike. Once you learn to ride a bike, it's simple. And I just want to shout out, I did a poll here in our chat. When did you make your first crypto purchase? Pre-2017, 16%. 2017 to 2020, 39%. And 2021 or later, 43%. And I think this is something all of us, I don't want to use the word influencers, but public faces within the crypto ecosystem. I think we're learning to break things down. And that's one of the focuses of this channel, is to throw that rope back to beginners, because as much as we feel like this ecosystem has been around for a long time, which in a way it has, but it also feels that way with time distortion because these markets are 24/7. And a lot has happened in the last 13 years, a lot. I've been in since 2016, and I feel like I've been in the markets for 42 years, and it's only been a small amount of time. But the point being is, the adoption rate within crypto globally is still so low. And and I try to bring this out to people, the number that we see is not necessarily an accurate number. Let's say I remember seeing a recent, I don't know if it was a Bloomberg article or some financial report, that they had done a poll and established that maybe around 21 or 22% of Americans have owned some form of crypto. Now, I think that number is sort of misleading because that doesn't mean 21% of people own one full Bitcoin. And it also doesn't mean that 21% of people have even more than 10% of their portfolio allocation of investments in crypto. I would assume in a way, or argue, that it's probably on average less than 5% portfolio allocation on average for that 22% of people. So if we look at that on an aggregate for what that adoption means, and we look globally, we're probably at somewhere around the 1% mark. And as this ecosystem grows, and as we grow with it, over the next 10 years, there's going to be a disproportionate number of new people in every cycle. So one of the things, and I'm shouting out everybody in chat right now, all of you that are here, I want to say congratulations on your courage for being a part of one of the best technological revolutions of not only our lifetime, but probably since the Industrial Revolution. And, railroad tracks were first laid. These are the railroad tracks to the future, the digital railroad tracks, Bitcoin, blockchain, the different crypto utility tokens, the infrastructure that's being built. But with that being said, know that although something may be so obvious to you when you look at a chart, you could say, how could somebody buy here, or why would somebody sell here? The truth is, the majority of people in the space have, I don't want to say no idea what they're doing, but they're very much of the cohort of the retail mindset, of the emotional buying hype, selling fear. And so the minimal knowledge nuggets that you can pull from, whether it's this channel, whether it's Bill's channel, whether it's BitBoy, whether it's Frankie Candles, Crypto Zombie, it doesn't matter where you pull any information from. I just want to say, I want to commend everybody for diving in and being here in a market that can be frustrating, but also know that your sword is never sharp enough to go into the battle of trading. So always seek new knowledge and really challenge yourself to always help yourself, help me help you. No, help yourself sharpen your sword, because the edge is always going to be different, and it's always going to be newly defined as more people learn about these markets, more people enter them. And being here early is going to help you, and learning is going to really help you navigate the market. So you've gone through a number of charts, Bill. Is there anything you're seeing in relationship to, we have a big, I don't want to call it a shift, but evolution within the Ethereum ecosystem coming. We're just on the heels of that right now. And of course, this part of the conversation might be geared towards Ethereum, but I want people to take note. The best way to learn in all these situations isn't just to attribute this part of the conversation to Ethereum, but this goes for any evolution or upgrade or change or advancement in any blockchain. This idea of buy the rumor, sell the news, with this huge advancement coming to Ethereum, with a lot of stuff being locked in staking for the last year plus. How are you sort of seeing, you know, as an Ethereum investor or even potential speculator? I don't know if you hold Ethereum or not. How do you prepare for this sort of shift and change with the protocol? In this case, we're talking about Ethereum and the unlock. Do you think this is going to send the markets higher? Is this going to be a push up, sell off, and then large continuation? How do you prepare for something like this?
Once upon a time, I worked in the government bond market. That's where I got my first trading experience. And we used to use a term called, you know, the supply, right? How much bonds are the government going to issue? Because that's how they, you know, that's how we borrow $31 trillion, right? We issued bonds. And then we used to look over at corporate bonds to say, okay, how much money are people in the private sector trying to borrow? And how many bonds are coming to the market all at once? So supply matters, obviously. Now, there's two things about ETH. One, the supply is shrinking. Proof of stake, right? Everyone's like, oh my God, proof of stake is illegal. The supply of ETH is shrinking. Those charts have been circulating in institutional chat rooms. I've seen them. Okay. Everyone's like, oh my God, they're going to come out of staking and sell at the market. Well, guess what? Okay. We can't predict what someone else is going to do. But here's what we do know. The regulatory arm of the US government doesn't want to provide regulation or clarity. The legislative branch of the US government doesn't want to pass a law that allows the regulatory branch to enforce it. So they've gone to the judiciary, they've gone to court and say, do our job for us. Ethereum is a security. The New York DA is doing that. Well, a judge is going to look at this and go, you guys want me to make a ruling on a law that doesn't exist? They're going to get laughed out of court. Absolutely laughed out of court. So this idea that Ethereum is illegal, not going to happen. Could they disrupt the internet, the nodes? Yeah. But Ethereum is not going to be illegal at all, ever. Okay. So when you think about ETH as the currency of culture, when you think about Christmas presents and having MetaMask going from one phone to another, ETH transactions are cheap. Bitcoin takes a while. If you got to get money out of the banking system, you got to park it in Bitcoin. I get that. But if you got to buy Christmas presents or holiday presents, ETH might be the answer. Now, the question is, where do you buy ETH? Just the same thing as where do you buy Bitcoin? I wouldn't be surprised if ETH did a major catch-up rally in April and maybe even May. Sell in May and go away doesn't mean sell the first day of May. I mean, somewhere in May, you get a top. So with ETH, you may get a catch-up rally because it's massively underperformed. Institutions were like, well, we missed Bitcoin. What are we going to buy? Well, maybe we'll chase ETH and Cardano, because that's one thing that institutions do. You know, like if you missed Bitcoin, all right, well, you better not miss the next one. That could be ETH. Performance chasing. So when all this supply comes out, people assume that there's no one there to absorb it. Now, there may not be if we're in the middle of a down move and the enforcement regulators in the U.S. win. But I don't think it should be automatically assumed that everybody's going to come out of ETH staking all at once, because that's not true, and that they're all just going to sell at the market. Right?
I think that's a good point. You know, also considering the level of awareness, I think also of people that were staking Ethereum a year and a half ago, I would argue large in part weren't people that just got in the market a week before. They had some sort of understanding of the crypto market and sort of a longer term mindset there. So that is definitely an important consideration. I guess that also kind of ties to what I see a lot, and I'm sure you see this a lot as well. You know, these, and I remember being so excited about these 2 or 3 years ago when I get an email, a marketing email about a new ICO and or a new coin launch, and get in before you can get it at this discount, or getting tipped off by a friend that this coin is launching on this exchange today, and thinking I was going to buy it and it was going to absolutely explode. And I'm not as smart as everybody out there. And so, you know, it probably took me 3 times to make the error of buying the launch, you know, buying some pre-sale stuff, but also the launch. And then only to see, we just saw this the other day with Arbitrum, starts way up here and immediately sell off and then comes, you know. And so this concept of whether it's an evolution in a chain or you're going to get in this chain now and it's going to go up massively, you know, I think it ties all back to strategy and patience. You know, it's, do you have anything that you do? Because I know, regardless of how long you've been in the industry, I know that you're human, and you know, myself as well. As much strategy as I have, I find myself sometimes capitulating out of a strategy and finding myself being emotional in a market. Do you have anything that you do to help keep you, if you fall off the tracks, one, to get back on the tracks quickly, or to help identify when you notice that you're going off the tracks, to bring you back to an effective, meaningful strategy that you actually have a plan for, rather than falling in that emotional trap?
Yeah, sometimes you got to do the hardest thing in crypto, which is either not do anything or walk away. There are three choices in crypto: buy, sell, do nothing. Now, if you've done 9 bad trades in a row, maybe your research framework has to be reevaluated, or maybe you just need to clear your head. You know what I'm saying? Sometimes you just have to walk away. Now, at a more advanced level, as funny as it sounds, because I'm a bigger guy, I like yoga. Like when I'm screwed up, I call, you know, a yoga studio and say, hey, can you book a private lesson with somebody? And the $100 for the private lessons, if it saves you $4,000 in P&L destruction, it's a good investment. You know, tell the person that, you know, your head's not clear, you're not seeing things the right way, you know, you're not seeing the next step, and then maybe they can take you through something. Some guys surf. I know one guy who surfs, you know, kind of like to get him in sync with nature. And speaking of nature, nature never hurts, right? Sometimes you just gotta clear your head, because every trader in the world, every single trader in the world has bought the high and sold the low, sometimes in the same move. George Soros got stopped out in 2008 of all of his shorts because his position was too big. So if you think you are the only person in the world who's ever lost money, that is not true. Everybody in the market has one thing in common. They've all done their first trade. They've all bought the high and they've all sold the low. Everybody. And the question is, let yourself off the hook, right? And not letting this get out of control so that you rage quit. Like, I mean, do you know how many, I worked for a research service in 2018. Bitcoin went from 6,000 to 3,000. And everybody said, hey guys, love your research, but I don't have any more money. I blew out. You never wanted to get to that point. Walk away. Just walk away.
Yeah, the same can be true. You know, the same can be true when we have, you know, you talked about the 9 losing trades. Sometimes we chase the high as well. You know, you can have, even in a single day, 3 winning trades, and then you want more. It's like a hit, you know, I want more. Or even if you do 1 trade and you have a target set and the strategy is perfect for the move, everything executes exactly as intended, and then the price gets to that projected target and we fail to take profits, or at least at minimum, I beg people to do this. You don't always specifically need to take profits at a target, but what you need to do at minimum is at least move your stop up to being, no matter what happens, you're going to be in profit, rather than saying it's here and I don't want to move my stop here because then if it comes down, then I'm going to be stopped out. But at least you're stopped out in profit. The name of the game here is, if you have a 6-month sort of position trading strategy for a move, for instance, a good example is 2018 into 2019, when we had the move from about $3,500 up to $14,000, and then people wanted more, and then the price started reversing, which is something very likely scenario that could play out. We're going to get one of two scenarios, I think, that are going to play out most likely. There could be a third, of course, but throughout this year into 2024, going into the halving, I think we'll either get a very shocking push up that just blows people away, whether it be up to 38K or all the way up to that golden pocket at 52K. And people are going to be so excited that they're going to forget that there tends to be a push up and then a sell off into the halving and then the follow through to the upside. And so what they do is they buy not at the bottom, the 37 up to 14. They buy at 12,000. It gets to 14. They don't take profits. And then once it drops to 6, they've lost theoretically on paper half their investment. So then they capitulate, and then price, rebounds, comes back up, and then they buy above 14 again or above 20. And so rather than having that strategy in place, rather than understanding that the markets are going to do everything to essentially the markets will start catching momentum, moving up. And then once the momentum is caught, that momentum that started with long-term holder-minded investors that are buying the red. And then when you're buying into that green, you either need to be very patient, or have an effective strategy in place. So like where we're at right now, I think we've got a little bit of time left. I'd love to jump back into the charts a little bit because I've never utilized that Fibonacci fan, which I thought was phenomenal. Can you just give a basic rundown, pull up a chart that doesn't have that on there, and just give a basic outline of how to draw it, from what high to what low, just to get just a little bit of a lesson for me and for everybody here watching the channel, because I thought that was a phenomenal tool.
Okay. So this is kind of a combination. I'll just try it on Polkadot. Like I don't know what the answer is. I'll just try it. So one thing that Gann used to do, or you can do in this particular example, is you can, you got to pick a high and a low in Polkadot. Let's maybe make this a 3-day chart. Take this off. Okay. So you got to pick a high and a low. And which high and low do you pick? Well, you don't know. But what you're going to do is you're going to draw a set of lines and see where, if anywhere, the lines helped in the past. So let's start at the April top of last year and just come back down. Oops. Sorry. So start at the April top and connect the low there. And has anywhere in here, has this set of lines been useful? Just, in other words, you have to ask yourself, okay, did using this structure drawn off this high and this low on the Polkadot 3-day chart, was it useful? Well, if you focus in and zoom in, it looks like they did a sideways breakout here. Like right here, when it went through one of the lines sideways, it rallied. And then Polkadot broke through the line and then came back down, and look at that right there. Hey, it held. Sometimes guys call it bump and run. Interesting, right? So maybe Polkadot's got a shot at going to the next line at 734. Now, how do you know that this is the right line? Well, you don't. But if you say this may have worked in the past, you can have a laugh, but, Gann used to call it, did the set of lines vibrate with the market? The numbers in nature guys, they're talking about vibrations, waves. This line seems to have a pretty good vibe. And if you want what the market wants, remember that from Williams, Polkadot's got some room because this did a sideways breakout. It validated this line. So if this structure is valid, you could jump up to 7.38. Now you could also, I got lucky on this one. I was like drawing this live, right? People like live TA, but for the analyst, if the thing doesn't give you anything, it's tough. You have to just say, all right, well, it didn't work. I got to move to something else. Right. And then, of course, you can add to it in Polkadot. You can add some basic stuff like a downward sloping wedge. Okay. The soccer ball or the football underneath the, push down in a pool. You ever take a fully inflated ball and push it under in a pool? When you let go, it not only comes to the surface, but it pops all the way out. So when you have a downward sloping wedge, that's bears going, ugh. Remember Polkadot for security tokens? What happens if Polkadot pops through here? Katie bar the door. So, that may or may not happen. This could be just a channel. But there's some hope for Polkadot over the next month. So if you got a decent chart and maybe you can use your imagination, because, we're not the only one looking at this. Maybe Polkadot can do something like go to 738, run above this, make it look fantastic, and then come back below it.
Yeah, and you know what I love about this too, and just to point out to everybody, you can keep this chart up, is you can see that on this is this called a fib fan? Is that what this is called?
Fibonacci speed resistance fan.
Yeah, but you could see as it,
but it's on TradingView, right?
Yeah. But as it broke through, let me see if I can annotate. As it broke through this level right here, as it broke through that level on the fan, and then basically came down and retested this area. As this has come up, one of the things I really like to encourage everybody to do is never use one tool. One of the things that I find interesting about this is as this found resistance and came down and then bounced here, and as it's coming up, we also see that the RSI is holding, above the 48 to 50 line of, which is more bullish. And we're seeing this angled to the upside as this pattern also is angled to the upside. So there's a confluence of data that is supporting the notion rather than just finding one tool that does something. Do other technical indicators and momentum indicators agree with a probabilistic move, which I think is really interesting. There's a lot of people, I find, less people that are specifically in crypto that use the Williams %R you have the Williams awesome oscillator. What is that oscillator based off of, or what is that? Is that just is that an aggregate, basically momentum sort of oscillator, or what is that specifically showing?
Right. So Williams was pretty much a genius, and he combined a whole group of oscillators, and that's why it's called the Williams Awesome Oscillator. Now, you can use this for a variety of things. One of the things that I think is very powerful is that when that Williams oscillator gets very close to zero, like very close, like as soon as it pops its head above or below zero, that's a signal a big move is coming. So Williams Awesome Oscillator allows you to bring in not just price, but price and time. Like, you got to really pay attention. Like, hey, maybe there's going to be a massive altcoin catch-up rally. Well, Williams Oscillator supports that. It supports that. So, it's an aggregator. You got to buy Williams's books, learn about it. Most of Williams's books are about psychology. And a lot of what I learned on this was from other people. So that's the message in Polkadot, so, you have the Williams Awesome Oscillator hinting at a bigger move. You have the 13 period RSI trying to cross a moving average, and you got a lot of room. You got room. Like, look to the left, look to the right. I mean, remember that? Okay. The high uptick before FTX was 738. The diagonal line and the top of the pennant, or the top of the downward sloping wedge, comes in at 738. So if you didn't have this and you didn't have this, you could just say, all right, well, maybe this thing's headed for 738 because it's got room. But sometimes remember what I said, it's not just support and resistance. It's where did the market start and where did the market stop? Where did the market stop last time? 738. Where is it now? 631.
Yeah. It's such gold, man. I appreciate so much having you on here. We've got a little bit of time left. Do you have any other coins or projects, or whether it's even traditional assets or other sort of dominance charts or specific altcoins that are specifically piquing your interest at the moment, or giving you any sort of edge on a next move? It could be an index of something, or a dominance, or a specific coin. I'm curious what you're looking at.
Well, we talked about the dollar, right? How do you profit from a dollar down move? Okay, so this comes from a guy named Rick Ackerman. Basically, one of the smartest people I've ever met. Was nice enough to share some of this stuff with me. I mean, he learned it from seminars and whatnot. So this is called Fibonacci extension analysis, or hidden pivot work. Like, where are the hidden levels in the market? So you have to do some adjustments to your Fibonacci extension tool, but you pick a high, not the high, pick it like a sub high, then find a low, then find the high uptick. So if this is a trend, what are the hidden levels in the dollar? Well, looky what we got here. We got 102.60. And if the dollar cannot get back above 102.60, the next target would be 99. And the ultimate target could be 93. So remember what we were talking about, right? It's kind of like, all right, well, maybe what everybody's going to do is come in and buy the top. So maybe it's going to be 102 to 99. I mean, can you see crypto Twitter? Dollar index below 100, dollar headed for zero. Okay. Yeah. At which point dollar index probably
extremes
goes back up, right? Everybody goes sell in May and go away. Bitcoin goes down, dollar goes up, and then after everybody is out, dollar cracks, dollar tries to get back above 100. And then at some point, buy July and let it fly, not investment advice. Maybe dollar starts that. Okay. And then you take the low time frame and you go to something I used to do at Goldman that people used to love, quarterly charts. Remember? What's the best thing to look at? The stuff that no one's looking at. Okay. In 1986, completely different set of circumstances, but central banks got together and said, you know what? The dollar should be lower. G7. They said, hey, guys, license to sell. So George Soros made all his money. Okay. He realized it was a fundamental shift. And after this move, right, after this part of the move, everybody covered their shorts. And George Soros kept selling, kept his trading desk up all night. Remember, Legacy FX 24/7. Dollar index went down 70, 80% over the course of, 6 years. Well, with the way things move today, I don't know if it's 70, 80%, but, this big chunk of the down move that occurred over like a year was about 40%. That's a lot in Legacy, 40%. So wouldn't it be funny if the dollar index dropped 40%? That is 60. So if 1985, 1986 repeats, By the way, 1985, 1986 was a year of a hybrid solar eclipse, which we have coming up in April. It's been 4 hybrid solar eclipses in my lifetime. Just a little GAN trivia there. What happens if the dollar index goes from 103 to 60? Okay, because I had tactical analysis from Hidden Pivot. And then I have like a big picture 3-month chart. I mean, you might get a signal off a 3-month chart once in, I don't know, once every 3 years. Okay, and then go back to the daily chart of the dollar. You know, I have to put the chart back together again here, but take a look at what the Williams Awesome Oscillator is doing. Like, blow this up. That's getting kind of close to zero, or it was close to zero 2 days ago. Maybe a big move in the dollar is about to kick off. Maybe it's a couple days away. Okay. The question of, is the dollar the reserve currency of the world and will the Chinese yuan replace it is not the issue. The issue is, how do I take advantage of a dollar down move? And how do I not get stopped out so I can take advantage and actively manage my portfolio so I can take advantage and get the most out of it? And most importantly, be there for the big trend. Sorry, lost the screen, right? In other words, if it's dollar lower, then maybe it's Bitcoin miners up. Like, just some common sense here. You know, HUT mining. The high was 16. The low was 63 cents. It's sitting on top of the 60-day exponential moving average. I mean, let's just be stupid for a minute. I mean, if it's the bigger the base, the higher into space, the longer it sits down here, the more violent it could be when it goes up. Here's a question. What happens if the only way to buy a ton of Bitcoin is to buy a company that owns a ton of Bitcoin?
Which is a strong possibility.
Right? I mean, that's Michael Saylor's strategy. No one wants to buy a crappy little computer company, but I'd buy a crappy little computer company that has, you know, more Bitcoin than God, because I need a whole bunch of Bitcoin and I could never buy that in the open market.
Yeah, we still have the cognitive. We still have the cognitive dissonance throughout the majority of people who are not adopters yet, that think they can't afford they can't afford a Bitcoin. They're thinking of it like a stock. And so, you know, when you have these GBTC and MicroStrategy and other Bitcoin facing or Bitcoin adjacent or Bitcoin tethered traditional assets, it allows that traditional minded investor the ability to think that they're able to buy a smaller share when they could have done so in the first place in Bitcoin. But Bill, we're going to have to wrap this up only because we got to wrap the show up. I mean, we could go. I'm so excited. Obviously, we always have more to talk about. I look forward to, if you're open to it, we'll have you back on next Friday for sure. Thank you for being here. Thank you for all that, for all the knowledge, and thank you so much for your time. Yeah, I'm into it on next Friday, and as much as you need, because, you know, any good technical analyst worth his or her salt wants to help people. Making money, yeah, we need to do that, but helping people is important. So anything you need. Absolutely. And everybody, if you have not yet, I'm flashing it on the screen. Make sure you go and follow him on his Twitter at @crypto_noble, which is NOBLE, I believe. Let me know if that's incorrect. I believe that's correct. But again, Bill, thank you so much for coming on. I hope you have a wonderful weekend. I look forward to chatting with you over the week and having you back on next Friday. All right. We'll see you soon. I'll see you later, my brother. Everybody, how good was that? That was, man, this you can't beat somebody that has had time in the space. Time in the space beats timing the space. Now, what we're going to be doing now before we wrap out, if you have not yet, make sure you come over right now. I'm giving you a last chance. come and retweet this tweet right here on the BitLab Academy Twitter page, which is the last tweet we've done. This is today's right here. Retweet this. We are going to be picking a winner. We're not even sure who the winner is going to be or what the prizes are, but there are a number of prizes, which you can see right here. We've got 2 month of indicators, a 2 month of courses, 1 month of indicators, 1 month of courses, or 2 months of courses and indicators. We're going to be spinning this wheel. Let's see what the prize is going to be. First, we can see this right here. And we can see this is coming out at 2 months of courses. All right, so now we got to pick what day of the week is going to be the winner. Let's go ahead and see this, and we'll go back through the Twitter to see exactly which one we are going to pull names from. Oh, it's going to be Monday. All righty. So now let's come back over to the Twitter page. Now we can come see what was the date of Monday. Monday was, let me just see here. It's pulling up. Monday was the 27th. So let's go back to the 27th. 27th. Nope. We did not have a stream on Monday, I believe, because it was the last of the month. So it's going to have to be Tuesday. If everybody's agreeable with that, we did not have a stream on Monday. So the winners are going to be pulled from Tuesday, and that is this one right here. And so I need to copy this link, come over to the Twitter page. Boom. Now we can get Twitter data. I need to log out. Got to log back in, log in with Twitter, authorize app. All righty. Now what we're doing is we're picking from those who retweeted, retweets, link of tweet right there. Now we are going to get Twitter data. Now let's see. It's going to be 2 month of courses, I believe. Was that right? 2 month of courses. And again, the only reason we didn't do Monday is because we had no tweet that we did on Monday. So we just moved it to the next day. It's completely random. So we got the data there. Now let's pick the winner. This is for, if you've already won, we're going to move on to another person. Crypto JMP, what is up? You get 2 months course access to the BitLab Academy. And right now we are in the process of rolling all that new content out. Technical analysis, candles, candle patterns, trading strategies, psychology of trading. I mean, there's so much on-chain data analysis, fundamental analysis, quantitative. I mean, there's so much content in there. You're going to have access to the courses as well as the Discord. If you're already a member, we will, of course, just comp you the next 2 months. So with that being said, I just want to shout out, if you have not yet hit that like button, hit that subscribe button and ding that bell. Thank you so much, everybody, for being here. I appreciate all of you. I hope you have a wonderful, wonderful weekend. I'm heading over to BitBoy Crypto now. I'll be doing some TA there. So come check us out over there. And with that being said, everybody, you know what? I love you all. I appreciate you all. And I hope you have a wonderful weekend. So I will see you later. Adios, muchachos. Thank you for coming. Thank you for tuning in. Adios, muchachos. Thank you for coming. Hit that like button, subscribe, ding the bell again. I appreciate you all. Have a good weekend.